June housing market update. Instead of the doom and gloom, let's give you guys some reality check as to what the real estate market is doing right now in the single family sector, and let's migrate this into the multifamily sector and the commercial sector. But I want to really give you real insight and perspective on what June brings to the housing market and what the updates are, what you should be looking for as an investor and end buyer. So look, we've been looking at a market that's been volatile over the last year, and we've seen market conditions go up and down and then plateau. And today, I'd like to give you guys a little bit of insight from what the National Associations of Realtors is telling us, as well as the National Association of Home Builders. And at the end of this video, what I'd like to do is explain to you guys how to strategically position yourself to take advantage of profits with where the market currently is. People always ask me, Jerome, should I be buying in this current market? And no matter whether the market is extremely aggressive and doing extremely well, or whether the market is doing extremely bad, I always tell people you should always be buying. It's not whether you should be buying, it's what you should be buying and how you should be buying it. And so today's market update will give you some insight on where the market is, and then we'll give you some insight on how you should be investing in real estate today. So look, one of the big things with the housing market right now is there's still a huge inventory shortage, and the information I give you is going to explain to you why that is and how the market is being affected by it, in spite of what some of the numbers are and how they're skewed. So the housing market is competitive, and it stays competitive despite what media is telling you guys right now. In fact, it is still a seller's market, and sellers still control the market, although home prices have flattened over the last 3 months. So we're not seeing this exponential growth of housing prices, but we're also not seeing housing prices fall. Over the last 3 months, housing prices have plateaued, they've stabilized, but yet there's still not as many homes on the market right now as there was last year. So in fact, right now, there is 19.1% less listings on the market today than there was at this time last year. And the reason for that is there's less new builds coming out of the ground than there was at this time last year. So houses are still selling extremely quick. There are less new listings coming on the market than there was at this same time last year. The National Association of Realtors is projecting that there's going to be a quick rebound to the market when things do level out economically nationwide. And so one of the big things for residential investors and residential home buyers is that in spite of where interest rates are right now and mortgage rates are right now, in spite of how expensive money is, the market will rebound quickly because of the lack of inventory. Now, one thing that I actually noticed, and to my surprise, I always talk about affordable housing, not realizing how ambitious other people are gravitating towards the affordable housing market. Now, affordable housing is up by over 38% according to the National Association of Home Builders since January of this year. So over 38% increase in new homes and pre-existing homes that have sold in the affordable housing sector. Now, this constitutes for the median buyer. The median buyer being people that earn less than or equal to $96,000 a year. And so we have attacked affordable housing in a way that they have been trying to do since 2012, but they're finally starting to gain traction, and developers paying attention to this market sector, which is going to be a massively profitable sector for investors, builders, and developers to take advantage of. So look, if you're looking at coming in to the housing market or building market or development market, the affordable housing sector is one to be looked at. But there's a caveat to that I'll go over with you guys here in just a short minute. Now, what is the average median home price right now? Because this is going to depict how we invest. And they're telling us that today's average median home prices nationwide is $389,000, which is up by over 3.1% year over year at this time last year in April. But because it takes a couple months for numbers to populate and for numbers to actually hit the market, we don't have a June update, but as of April 2023, the average median home price is $389,000. Now, how do you position yourself strategically to be able to take advantage of this seller's market that still exists and the stabilization of house prices, and where you can strategically position yourself for the massive need of homes? Because right now, active listings, although they're up by 5%, they're still lower than last year by 21.8%, which still gives sellers the opportunity to price their homes competitively without dropping prices. And there's going to be a market slowing because of the lack of inventory until developers actually start taking more homes out of the ground. So look, I've been telling people to strategically buy land and build houses, but it's not just buying land and building houses. There is a specific business model that we exercise to make sure that we are protected in the best way possible in the housing market and where it sits today. Now, everything's a risk, ladies and gentlemen, everything's a risk. When you turn dirt, you buy a piece of dirt and you go to build a house, there's risk involved in that. So I don't want people to sit back and believe that my business model is 100% bulletproof. There is risk in everything that we do, although we have been successful 100% of the time in every acquisition, making profits in every new build. And the reason why is because of the demographics that we hit. We hit the upper middle class, people that earn in excess of $96,000 a year, which only constitutes for 24% of home buyers in the U.S. market, which constitutes for over 100 million home buyers. Now, look, there are affluent professionals out there that are at the end of their careers, mid-career, and in retirement age that constitute for our largest demographics of home buyers. And you should be marketing these folks. And the main reason why is because they have affluency, they have money, and they're not challenged financially with down payments. They're not challenged financially with housing prices, although there is a threshold. And so that threshold is between $800,000 and $1 million. So when you're going after and attacking the new build sector, build homes in excess of the median. And since the median home price is at $389,000, be looking at building homes in excess of $400,000. And I'll tell you where the real sweet spot is for you investors and builders is in excess of $500,000. Homes that are being sold in excess of $500,000, and if you stay just under the threshold of $1 million, your successful profits will be anywhere around about $100,000 or greater, depending on what you build. Now, when we go after the upper middle class, we're not attacking affordable housing, but when we're talking about single family residential dwellings, you want to make sure that your houses sell, and you want to sell them in a demographical area that you have, one, the largest profits, and two, the safest acquisition for the quickest resale. And the truth of the matter is that people that are in excess of the average medium income and average medium home price, they constitute for over 14% of the new homes that are being paid for in cash. And so those are the people that you want to seek out, and that's the demographical area that you want to focus on. So investors, if you're looking at fix and flips, if you're looking at picking up real estate for long-term holds, right now the market has stabilized. Although it doesn't look like home prices are going to go down, and we're not going to see steals on the open market, at least not on the retail end. Now foreclosures, we will start seeing a little bit more of them, and we're projecting that the single family housing market will get hit and will get penetrated with foreclosures over the next 12 to 18 months. And where this comes from is it's going to come from the unemployment rate. Right now, the unemployment rate is currently sitting at just over 3%. And when unemployment is in a deficit of less than 8%, one of the big things you have to recognize is that unemployment is extremely low. But as money becomes tighter, money's expensive, large corporations start to feel the downward pressure from the expense of money, then small business owners in turn feel the same. And since 85% of employment comes from small business owners, we're going to start feeling the upward pressure from the expense of money over the next 12 to 18 months. Hence, people going into unemployment rates going up, and because of that, the residential, single-family, median home prices will get affected, and the open market for foreclosures will also get affected. So for those of you guys that are looking for opportunity in times of distress, that will be the sector to pay attention to most. Pay attention to unemployment rates. That will give you a great depiction of what real estate is going to do as we move into the future. Remember, if unemployment goes up and starts hitting 7%, 8% unemployment rate, that's when real estate in the single family residential sector changes and open door opportunities for short sales, foreclosures, REO properties, and investors can walk in and start taking advantage of discounted prices on foreclosed properties. So look, ladies and gentlemen, June is not a doom and gloom month. June is actually a really good month. If your listings are stagnant in June, it's predominantly because of the Memorial Day holiday, it's because of graduations, and it's because of people going out, and it's the largest vacation month of the year until after the 4th of July. So the housing market will always soften, it'll always plateau, and homes will always stay on the market for slightly longer through the month of June and moving into the first part of July. And then after the first week of July, housing starts to increase as far as showings, sales, and pending sales as we move into the heat of the summer. So there's no doom and gloom for June. We see a stable market and a bright future for investors, home buyers, and a stable residential real estate market. If you like this content, smash that thumbs up button, click and subscribe to our YouTube channel, and at the end of this video, I'm going to put in some data research for you investors and videos and resources that you can utilize to take advantage of what we're doing in the multifamily affordable housing sector and in our single family residential builds to profit immensely. And don't forget, always compound your success.